This is part 3 video, and today we are covering my top 7 small to mid cap stocks that I believe are the next 100 billions of dollar companies, billions of dollars in value companies. These, I believe, are the next wave of innovation in the U.S. and will be the next Mag 7 or the next leaders in the stock market and the economy. You know, the companies that become our everyday use or become widespread across the next generation. And so let's dive into it. First stock on the list. It won't be too surprising because I've done a long form video on this company, HIMSS. If you don't know what HIMSS is, they're a company that provides, I would call it, telehealth and prescriptions to different drugs. They got popular off boner pills, but are expanding their business significantly. And why I'm really bullish on this segment of the market is because I think this is the future of health. We've seen this big change of people not wanting to go to the doctors anymore. We haven't really seen telehealth in terms of like being on a phone telling your doctor. I think that's not the win, but being able to put in your information online, someone getting back to you, maybe even having a phone call with somebody. I believe this is the future of healthcare. And I think HIMSS is going to lead the way. I think there'll be a couple winners here, but I think HIMSS has the opportunity to be the main winner in this segment of the market. And so that's really why we think it's a win. I made a long form video diving into all the nuances of HIMSS. Go watch that if you want, like the reason behind the whys, where they're innovating, what I love about them so much. A couple things to be on the lookout for HIMSS. I think HIMSS is also a company that's a little bit more isolated from tariffs. I believe they're U.S. company only. They are, I would say, one of the top leaders in the space, maybe not the leader, but the top leaders in the space. The vulnerabilities for the company this year, which could send the stock lower, GLP-1, there's a lot of drama on who can have access to these, who can actually sell them, partnerships that may or may not happen. But if we look at the long term, again, go watch the long form HIMSS video. HIMSS is just getting into so many different wellness and care, that this business is going to be so much more than just, sex pills and hair loss. They're just going to become so much more than that. And so even at today, like when we look up HIMSS, let's look at FinViz, forward P of 30. This company at the low end will probably grow 40 to 50% if things go wrong. Company growing at 40-50%, increasing income, profitable, like they should not be trading at a 30. And so even if this company comes out a little bit more, this is not financial advice. I did nibble on this big pullback. Like, let's look at the charts and figure out where else it could go, right? Like, again, everything is already in a bearish cycle on the daily charts. That's why we're not looking at the daily charts. The daily charts honestly don't tell us much. The only thing it tells us is these stocks are in a bad place. We can try to figure out on the daily where they're going, but that's not the goal of this video. The goal is not to figure out where they could be going in the short term. This is focusing on why it's a long-term winner, and let's look at some important support resistance marks. So obviously the red, these are not great candles. When we look at the weekly, this thing is still, honestly, it's positive that it's still over this past pivot point. Typically, if pullbacks stayed above 45, we're at about 45. So I'd say this is a really important zone. Let's look at the 50 on the weekly to see where we're at. See, we're challenging the 50, bounced off it, went back above. And so before, I started nibbling because I just don't know where the bottom is. You can never catch the bottom of a company, so you just don't know where that's going to be. But if we look at there's a big gap between the 50. So the 50 is at about $23. The 100 is about 17. So it could play in that $5 range. $5 range is still about 15%. So this stock could go down 15 more percent. Who knows? But I feel like we've come down to some past really important resistance marks, right? Like we came down and hit 23. If we look at this 23 range, this is everything we have at 23, which there's just so much supply. So if we sell through that supply, there's not a ton holding it in this range. So we're most likely coming down to about $20. So it could, if we sell off, we are probably going to $20, which would be about 15%, maybe a little bit more like 20%. That's a super bearish case if we say this market has way more leg down because valuations are too high. Maybe the stock goes down to 20, but again, like, I have a very small position here. This is why you always buy into positions. You don't just buy your largest pool. I'm at, like, if I were to want to extend this position really large, I'm at probably a tenth of where I could grow this position into. And so with any more sell-off, I have a lot of room to buy because we just don't know where this market's at. We don't know if we're in a 3-leg retracement, which I talk about in my other videos, or if we are in the midst of a bear market and we still have 50% more downside. We just don't know, but this company has sold off so much. They're going to do great. They're going to have really great growth regardless of what the rest of the market does. And so these are zones where you really have to start considering. Next stock, another telehealth stock, LifeMD. Okay, so LifeMD, smaller company, does something similar to Hims. The reason I would want to own this stock is it's like the counterpart. Smaller company, they're getting to profitability. They're right on the verge of profitability, which is a big win. I think next quarter, I think they had like 40% growth on top line, and I think they just hit profitability or just missed profitability. Next quarter, probably be profitable with growth. We'll send this stock higher. But we've been in a trading range since July last year, right? Like, try to break above 7, came down to 4, back to 7, down to 4.5, went to 8, back down to 4.5, went to another, like if we look inside this zone, this is an important resistance place around $6.50, and now it's coming back below. So I bought on this dip. Not a financial advice, just sharing what I did. Make your own decisions. I am not your financial advisor, but I'm just buying this as a secondary. So typically when I buy 2 stocks in the same space, I have my winner, which is a much larger position, and then I have a smaller one, which I buy like 50% of it. So if I buy 10 shares of, just call it Hims, I'll buy 5 shares of this. Or buy, if I do a quarter position, buy 2 or 3 shares. And so this is typically how I build it out. I'm buying this just as contingency of my long-term bullish thesis that telehealth, getting your medicine, not when you go into, like a place that, like a grocery store or CVS, or not going to the doctors. Everything is going to happen through these companies because that's just how the next generation is going to want to function in their health. Next stock, SOFI. I've been watching SOFI for a really long time. They're like, oh, should I buy it in the 4? Should I buy in the 6s? I never did. Then it came up to $18. And now we're getting back towards a range that's really appetizing. Similar to my notes on these other stocks, I believe that this company is the stock for the next generation of banking. Obviously, you have other companies that are doing, like Chase or something. Like, say I have Chase, like, I don't go into the physical locations. I just do everything on my app. They are technically digital banks, but they're not evolving the same way SOFI is. SOFI is merging everything you would want in one place, whether that's investing, whether that's your debt, and refinancing your personal debt, that's your banking. And so just thinking again, the next generation, we're seeing this big shift of who is going to be the leaders in the economy, who's going to be making the most money. It's millennials and younger. Millennials are just at the almost close to taking over the lead spot of getting towards leading the spot in wealth generation. And so we look at millennials and younger, these are the companies that they're using. When I talk to, some people I know younger, they mention SOFI. They don't really mention a Chase unless it's something their parents told them about, or a credit union because their parents did it. We're seeing more people in the next generation use alternatives to what their parents or grandparents used. Similar to the health, right? Similar to banking and financing and taking on loans. Like, companies like SOFI are the future. And that's why this is a stock that I would consider nibbling here. When we look at the charts, again, everything is just so bearish. It hit the 200-day or 100-day, went a little bit below, and then came back above. If we look at the 200-day, it's above the 100-day. I didn't expect seeing that, actually. So we're challenging the 200-day, trying to get back above it. That's honestly, that's pretty bearish if we can't stay above the 200-day. I think if we, something's off here. Oh no, that's right. Yeah. $10, there was a lot of resistance we broke below, and that's why we flushed to $9. And so when we look at the stock, obviously a ton of support around 850. If we go below 850, then we have it around, let's just call it, I'm just going to go all the way down to 650. And then there's some support and resistance within this mark. So if we go around 750, so 650, 750, 850, so dollar mark. So this stock is essentially going to move in dollar incrementalities if it moves. It's still not oversold. So if we are in a recession or a longer term bear market, similar to other stocks, this stock still has a little bit room to go. It could go lower. If you want to play Latin America, I talked in my other videos about how I'm kind of bullish on Latin America. I'm just going to quickly cover it. New as a stock you want to consider. It's been holding up decently well here. I think this stock also broke below the 200-day, which is bearish. But if you want to play Latin America, that's a stock you would consider. Next stock. That's a little bonus stock I just threw in there for you. Uber. So Uber is a stock that I personally love. I've talked about how AI, VR, AR, like all these AI related things are just going to take over certain industries, and we're going to see vehicles without drivers as one of those first things. We won't see robots in the home for a while, but you will see robots driving you around really soon. It's already happening, and over the next 2 years, this thing is going to ramp up significantly. And Uber has the ecosystem to do it, right? Like they're the leader. Everybody wants to partner with them. They've already partnered with Waymo. They have more partners launching in other markets around the US. They're going to launch in New York with automation with another company. And so they are going to the market quick. The caveat, Tesla is also launching this summer in Austin apparently. So we're going to start seeing a battle between Uber and Tesla. Where Tesla is very vulnerable is they do not want to partner with Uber. And even though they have cars that have scanned the roads for years, they have their mega brain in the Tesla car and their AI, they don't have the ride share ecosystem. So they're going to have to create a new infrastructure of people hailing for a Tesla. Do you have a Tesla app? In that app, do you then have to call a car? You're retraining people where people already use Uber. It's already the main driver in the US. So that's why I'm extremely bullish on Uber in the long term. You also have some big dogs making really big convictions in this stock. One of those is Bill Ackman. You have some other people in tech that have been buying on this dip. And so this has been a sideways pattern. We'll just build it out just so we can see it. This sideways pattern has been going on for a while. Ever since February of 24, we've been in a holding pattern. As long as this thing stays above around 60, this is accumulation. Accumulation means big boys are buying. And as long as we stay in this accumulation, it's just preparing itself for the next leg higher of this company. And the next leg higher, as soon as this AR stuff starts to take off, right? Autonomous vehicles, AV, as soon as that takes off more, then the margins of this company is just going to explode. Their margins are already great, but they're going to explode even further. So their revenue, more people using. I did a long form video on Uber. Go watch that. That's going to tell you all the details want to know. But again, just needs to hold 60. If it holds 60, we're sideways pattern. If you want to kind of similar to HIMS and LFMD, LifeMD, if you want to play the stepchild, play Lyft. Similar if you own 10 shares of Uber, maybe own 5 or 2 to 3 of Lyft. Kind of play it side by side, even though these guys will never take over a lot of the market, and they might continue to get squeezed by Tesla or Waymo. They have an infrastructure too. They have the built infrastructure that gives them a little bit of a lead. They say they're not going to launch till the end of the year for autonomous vehicles. They're going to have to speed that up to stay competitive, but these guys have been in a holding pattern since 2022. They are profitable now. They have increased their growth rates a bit, so I'm a little bullish on Lyft. Could they go a little bit lower, right? The bottom of the range is around $9. Sure, they could go down $2 more, but this is a stock you also want to keep an eye on just to play the sector versus just one company. Next stock, Hood. Okay, why Hood? People talk about this stock all the time. The number one reason I'm bullish on Hood is, again, the next generation. the next generation of investing, the next generation of banking, right? We just saw that Robinhood is getting into banking, making it not just an investing app, but beyond. So you have crypto, you have stocks, you have stocks, and then you have banking, you have loans, you have saving accounts, right? And so these guys, again, very similar to SoFi, will be the next generation of finance. SoFi is doing something similar, a little bit different, not as much in the stock side of things, but these companies are the future. This stock is slightly more vulnerable just because it hasn't retraced as much, right? Like we got to 76, we've already traced, we'll just call it halfway, but look how much dead zone they have here, right? Like if they break below 33, you have a gap at 30, and then you just look at this, like you just have these candles that went straight up. So when you have a candle that went straight up, you're probably breaking back below to the next support, which is around 30. And if you look back here, not much support. You have a little bit more support here. This thing could go down to $25 very easily. And so that could be $10 more of downside for these guys. So something to be aware of. But again, very similar to SoFi, this is a stock of the future. Like this is what the next generation is going to use. Obviously the valuations got a little crazy. If we look at Hood stock, the crazy thing about Hood, yes, maybe with crypto slowing down a bit, their revenue won't grow as much, but currently a forward P of 20. Guys, growth company, forward PE of 20. When we look at Hood stock and see how much they grew in their last earnings, that's not going to stand, but even if they grow up 50% and their net income grows by, 50%, guys, this stock should not be trading at a 20 future PE, right? Like forward PE. That's just unrealistic. Again, if we're in a longer term bear cycle, we need 5 waves down. This is ABC at most so far. Again, small tech bottoms first. So if this is the bottom, these have the ones that have bottomed the first. If not, we need the next rotation of all the defenses selling off, and then we'll have the next last wave of tech selling off, and we could still see that. But this is another stock for the future. If you own it, if you want to own it, you need to start nibbling. If you already own it, start building your position into your full position over the next year if things start to sell off more. And last stock on the list, guys, OKTA. So OKTA is in the cybersecurity. What I think is interesting about OKTA is 2 things. One, AI, and how agents are going to make security for your computer more important. That's the first thing. Second thing is OKTA's business is evolving. So they used to just be really small businesses that use their product for, if you've never heard of OKTA, it's basically like when you have passwords, when you need security on your computer, make sure hackers don't get in. That's what OKTA does. They're starting to find very large enterprise clients. So now they have small business and then they have enterprise. Very similar to PLTR, right? PLTR was, we had enterprise first and we went small business. These guys are doing the opposite. They built awareness in the small business, but now they're launching to the enterprise level, right? Big tech. If we just think about the future with agents, with AI, things like cybersecurity is just going to become so much more important. It's already really important, but it's going to become even more and more important. What's really cool about OKTA is they hit profitability on their earnings. See this giant pop higher on earnings, got rejected on the 200-day, and now it's sold back down to $90. So this is a watch. This is a watch list stock for me. Because cybersecurities are still trading at such a premium, they could also, the whole sector could sell off more, so it's something you want to pay attention to. But this is a stock you need on your watch list. OKTA is a pretty small company, definitely kind of in a different sector of cybersecurity than the traditional CrowdStrike and things like that. But this is a company you want because they're profitable, they've accelerated growth, and they're diversifying their business, and they're getting more enterprise clients. That is a recipe for success. And then obviously you have the wave of how cybersecurity is going to become even more important in the digital age with AI and beyond. So those are my stocks that you need to watch for the future. Guys, add these to your stock list. I guarantee you that these are the stocks of the future. I believe it 110% that these are the stocks of the future. Put these on your watch list. Thanks for watching the video, guys. Y'all are the best. Till next time, succeed in the markets.